All right, so let's dive right into this, huh? Looks like we've got a whole stack of news articles and analyses and even some social media posts you've been looking at.
Yeah, quite the mix.
Seems like you're really trying to wrap your head around the U.S. economy, and how the financial markets are doing, which honestly feels a bit like a roller coaster lately.
It definitely has been a wild ride, that's for sure.
There's just so much information out there, it's tough to figure out where to even start, you know what I mean?
For sure.
But hey, that's why we're here, right? To help you cut through all that noise and focus on the signals that really make a difference.
Absolutely. We'll break down those complex trends, point out any potential risks, and hopefully help you understand what it all means for you.
Perfect. So the first thing that really jumps out from all these sources is this sense that the market is, well, it's kind of stuck, isn't it?
Yeah, I'd say so.
Some people are calling it like going nowhere fast or treading water.
Yeah.
What do you think is causing this holding pattern?
Well, there are a few key factors at play here. First off, there's a lot of uncertainty about what the Federal Reserve is going to do next with interest rates.
Right.
Inflation seems to be cooling down, but it's not happening as quickly as everyone had hoped.
I see.
And that's making the Fed, especially Jerome Powell, a bit hesitant to, make any big changes.
Right.
So they're kind of taking a wait-and-see approach for now.
I get that, yeah. They don't want to shake things up too much and accidentally make things worse. But doesn't that, not taking action also add to the whole uncertainty in the market?
Yeah, it's a tricky balance.
Yeah.
For sure. And then on top of all that, you've got the whole debt ceiling debate looming over everything.
Oh, yeah, that's right.
Which is never a good sign for market confidence.
Definitely not. That's a ticking time bomb everyone's keeping an eye on. But even with all this uncertainty, there's this one company that seems to be doing the opposite, Meta. Their stock is on this incredible winning streak 17 days in a row. Some people are calling it Meta's miracle.
Yeah, I've seen that.
And a lot of people are saying it's because of their investments in artificial intelligence.
Right. But that brings up another interesting question. Is all this hype around AI actually bigger than what AI can really do?
Good point. Because even though Meta's doing really well, you have these respected voices like Aswak Damodaran, he's a finance professor at NYU, and he's questioning the value of these big tech companies and whether their growth projections, especially those based on AI, are realistic.
Yeah, Damodaran's argument is that these companies are investing tons of money in AI infrastructure, the basic technology behind it all, but they haven't really figured out how to make serious money from AI products yet.
So they're spending a ton on what AI could potentially do, but not actually making money from it.
Exactly.
It's like they're adding AI features to every single thing, but are people actually willing to pay extra for those features?
That's his point. He uses Meta and Microsoft as examples. They're both super invested in AI, but they haven't figured out how to make a lot of money from it yet.
Makes sense.
Think about it. You probably use AI features all the time in your everyday software, like in Microsoft Office or Zoom.
Yeah, for sure.
But has it really changed how you use those tools?
Yeah.
Or, made you want to pay more for them?
That's a great point. I mean, I use those all the time, and the AI stuff feels more like, I don't know, extra bells and whistles rather than something I need to have.
Right.
So if it's not all about AI driving the market, what else is going on?
Well, that's where things get really interesting. We have to consider things like consumer spending, how energy policy is changing, and, what role the government is playing in all of this, which is probably the most important.
Okay, so let's talk about energy policy then. The stuff you sent points to a pretty big shift under this new administration. They're really focusing on making energy infrastructure stronger, boosting innovation, and making sure the power grid is secure.
Oh, yeah, for sure. Energy Secretary Chris Wright has been super vocal about all that. He keeps saying we need affordable, reliable energy that's secure, and that goes for everything. Oil, natural gas, coal, even nuclear. It's a big change from the last administration, which was all about renewables.
So it sounds like they're trying to find more of a balance this time.
Exactly. Wright's approach is all about having different sources of energy and making the whole process of approving projects smoother so things can get up and running faster.
Okay, that makes sense. It's all about getting rid of roadblocks, making energy cheaper for everybody, that kind of thing. But speaking of keeping things affordable, we can't ignore the big issue, inflation. What's everyone saying about that?
Well, it's kind of a mixed bag. Jerome Powell, the Fed chair, he's been saying that inflation expectations are well anchored.
Okay.
But then you look at indicators like the 2-year inflation break-even rate, which basically tells you what the market thinks inflation will be over the next 2 years.
Right.
And that rate has been climbing steadily.
So it's like Powell is saying everything is under control, but the market doesn't seem so convinced. What exactly is this 2-year inflation break-even rate anyway?
It's like this. Imagine you're trying to decide whether to buy a bond that matures in 2 years. The break-in rate is the difference in yield between a regular bond and a bond that's protected against inflation. So if investors think inflation is going up, they'll want a higher yield on that regular bond to make up for their money losing value. So basically, if that break-even rate goes up, it means investors think inflation is going to be higher in the near future.
Gotcha. So it's like a built-in way to see what people are expecting about inflation. And then, to make things even more complicated, there's the whole impact of tariffs, right?
Exactly. Tariffs can make inflation worse because they drive up the cost of things we import. And then it becomes this chain reaction. Businesses have to pay more, so they raise their prices, and then consumers end up paying more for everything.
It's this whole vicious cycle. But if Powell is so sure about inflation being well anchored, does that mean he's not worried about tariffs?
Not necessarily. The Fed is watching all of this super closely. And they're also keeping an eye on how consumers are behaving. Because if people start thinking prices are going to go up, they might start spending more now, which can actually make inflation worse.
Right.
It's this balancing act. The Fed's trying to control inflation, but also keep the economy growing.
Tough job. But there's one more thing we got to talk about, and it involves a familiar face. Elon Musk. But this time, he's not buying up social media platforms. He's taking on government spending.
Oh, yeah, that's right. Things are about to get a little unconventional. Musk has teamed up with the administration on this new project called DOGE, the Department of Government Efficiency.
Wait, DOGE? Like a meme?
Yep, that's the name. But the goal is serious stuff. They want to find and get rid of wasteful spending in the government. And they've already made some pretty shocking discoveries.
Like what?
Well, according to what you sent, and there's a transcript from a recent press conference in there, Musk and President Trump shared some pretty eye-opening examples. They found government employees with, like, a ton of money they couldn't explain, way more than their salaries. And there's basically no financial control at the Treasury Department, plus outdated systems like the Do Not Pay list, which is supposed to stop payments to scammers.
Kind of like a complete mess.
It does, yeah. But the administration is stressing transparency. They're using platforms like Twitter to share what DOGE is finding and get these issues out in the open.
Using Twitter to expose government waste, that's a very modern approach.
Definitely. But it's also raised some eyebrows. Musk has gotten billions of dollars in government contracts for his companies, so people are worried about conflicts of interest. Can he really be unbiased in this role? It's a valid question. Musk is saying that all those contracts his companies got were based on merit, and that everything he does will be open for the public to see. Whether he can actually do that, well, we'll have to see.
So this whole situation just adds another layer of complexity to an already super complicated economic situation. And we've only just scratched the surface here.
Oh yeah, there's a lot more to unpack. We'll dive even deeper into these connected trends and what they mean in the next part of our deep dive.
Okay, so we've talked about a lot, huh? A market that's kind of just sitting there, this whole AI thing that's everywhere, changes in energy policy, people worried about inflation, and even Elon Musk going after government spending.
It's a lot to take in, that's for sure.
It really is. But the interesting thing is how all these things, which seem kind of separate at first, are actually starting to, like, connect with each other.
Exactly. It's like they're all pieces of the same puzzle, right?
Yeah, like a puzzle.
Yeah.
And as we put the pieces together, we start to see this clearer picture of what's happening in the economy.
Right. And that's what we're trying to do here, right? Connect the dots.
Exactly. Connect the dots. So let's take this whole government spending thing, for instance.
Okay.
On the surface, it might seem like it has nothing to do with AI or inflation, but if we look at the bigger picture, we start to see these links.
I see what you mean.
So how are they connected?
Well, think about what Musk and the administration are saying. They're basically arguing that if they cut out waste and make the government run more efficiently, they can free up resources, reduce the deficit, and maybe even ease some of the pressure on inflation.
Okay, so less government borrowing could lead to lower interest rates, which could then help bring inflation down.
That's the idea. And it's not totally crazy. We've seen how government spending can affect inflation before. The question is, will these cuts they're talking about be enough to actually make a difference?
Right, because we're dealing with a huge deficit. Even if they find billions in waste, it might not even make a dent.
That's true. And it all comes back to this idea of investor confidence. If the market believes the government is serious about tackling the deficit and getting inflation under control, that could have a really positive effect.
It could make people feel more confident, encourage them to invest, and maybe even help the market get unstuck from this holding pattern we've been talking about.
Exactly. But of course, the opposite is also true. If investors don't think these efforts are enough, or if they think they won't last, it could make things even worse and lead to more ups and downs in the market.
So it's a risky game, for sure. And then you have to consider how these policy changes affect specific parts of the economy. Like, we talked about the new administration wanting to get energy from different sources and make it easier to approve projects. How's that actually playing out?
Well, there are definitely some potential benefits, like this shift could lead to a boom in oil and gas production here in the U.S.,
Okay.
which could mean lower energy costs for everyone, and that would be a big help with all this inflation.
That sounds good, a win-win. But are there any downsides we should be thinking about?
There are always trade-offs, right?
Ah.
More oil and gas production here in the U.S. could raise some concerns about the environment, and we might see some pushback from people who want to switch to renewable energy faster.
Yeah, it's that classic dilemma, isn't it? Trying to balance short-term gains with what's sustainable in the long run. And it's something policymakers are going to have to figure out. But it's not just a U.S. issue either, right? Our economy is connected to the whole world.
Absolutely. We can't talk about U.S. economic policy without thinking about things like trade relationships, tensions between countries, and how other countries react to what we do. What happens here can affect things way beyond our borders.
We've already seen some of that, haven't we? With the tariffs that have been put in place. That kind of thing can really mess up global supply chains and create a lot of uncertainty for businesses.
For sure. Tariffs might seem like a domestic policy tool, but they can start trade wars, and ultimately that could hurt the U.S. economy in the long run.
It's a tough balancing act.
It is. Policymakers want to protect American interests, but they also have to be careful about the impact their decisions have on the rest of the world.
So how are investors reacting to all this uncertainty globally? Are they doing anything differently?
Yeah, we're seeing some investors moving away from U.S. stocks and looking for opportunities in international markets or in other types of assets like commodities or cryptocurrencies.
So they're spreading their investments around, trying to protect themselves from potential risks and volatility in the U.S. market.
Exactly, and this is where your own personal financial decisions come in. How are you positioning yourself in all this, with all this complexity and uncertainty?
It's a good question, and it's something we'll explore more as we continue our deep dive. But first, let's zoom in on some of the specific companies and industries that are being affected by all these economic forces. We already talked about Meta and their stock doing so well, but there are other big tech companies that are dealing with this AI thing in interesting ways, too.
Totally. Like Microsoft, they're putting a lot into AI, but just like Meta, they're trying to figure out how to make real money from it. And then you have companies like NVIDIA, who are making the chips and hardware that power all this AI stuff. Their stock has been going through the roof.
So it's not just the software side of AI, it's the hardware companies too, huh?
Exactly. They're all feeling the effects of this AI boom. And it's not just tech either. We talked about energy already, but think about consumer goods companies like Coca-Cola. They're dealing with rising costs, inflation, and people's tastes changing.
Yeah, that's true. And they just reported strong earnings, didn't they?
They did.
Seems like people are still willing to pay for their products even with prices going up. But for how long, right? And what does that tell us about how consumers are behaving in general?
Those are the kinds of questions investors are asking themselves. They're looking for clues in earnings reports, market trends, even what people are saying on social media, trying to make sense of how the economy is changing.
It's like we're all playing this giant game of connect the dots, trying to figure out what the final picture is going to look like.
That's a great way to put it. And one of the most important dots in that picture is the role of the government. We talked about the push to change how the government spends money, but there are other policy decisions that are having a big impact too.
Like how the administration feels about trade. Those tariffs, they could really shake things up globally and create a lot of uncertainty for businesses.
Exactly. And it's not just tariffs. Think about regulations, taxes, infrastructure spending. These things can all have a huge impact on economic growth and how confident investors feel.
It's like this giant web, and it's hard to know exactly how everything will play out.
Which is why it's so important to stay informed, to really think about the information you're getting and to be ready to adjust as things change.
So it's about looking beyond the headlines, digging into the data, and understanding what's really driving these trends.
Right. And recognizing that there's no one right answer for everyone. The best approach for you depends on your own situation, how much risk you're comfortable with, and your long-term goals.
So thinking about all this, let's shift our focus to you, the listener. What are your biggest takeaways from what we've talked about so far? What's sticking with you the most?
Take a moment to pause and really think about what we've shared. Think about your own finances, your investments, your plans for the future. How do these economic trends and policy changes fit into your own personal picture?
Because this deep dive isn't just about understanding these big abstract forces in the market. It's about giving you the power to make smart decisions that line up with what you want to achieve.
Whether you're a seasoned investor, someone who's just curious, or just starting out with your finances, this knowledge is super important for understanding today's complex economy.
It's like learning the rules of the game so you can play it strategically and set yourself up for success.
And speaking of success, let's talk about some of the specific strategies and tactics that investors are using to do well in this environment. We'll explore things like diversification, managing risk, and how to allocate your assets.
We'll also look at the world of alternative investments, things like real estate, commodities, cryptocurrencies, and private equity.
These are areas that are getting a lot of attention because investors are looking for ways to spread out their investments and maybe find higher returns in a market that's all over the place.
But of course, higher potential returns also mean higher risk. So it's super important to understand these asset classes really well before you make any decisions about investing in them.
Absolutely. And that's where we come in. We'll give you the insights, analysis, and context you need to make informed choices that are right for you.
And we'll also talk about some of the ethical and social implications of these investment strategies.
Because at the end of the day, investing isn't just about making as much money as possible. It's also about thinking about the bigger impact of your decisions and making sure your investments align with your values.
So if you're ready to go even deeper into the world of investing and explore how to navigate all this economic uncertainty, stay tuned for the final part of our deep dive.
We'll give you actionable insights, practical tips, and a roadmap for creating a financial future that reflects your goals and aspirations.
Man, we've covered a lot of ground, haven't we?
Yeah, we really have.
From the market just stuck in neutral to this whole AI explosion going on and all the changes in energy policy, people freaking out about inflation.
Right.
And then, of course, you've got Elon Musk shaking things up with the government. It's been a wild ride.
It has.
But the big question now is, what can you actually do with all this?
Right.
Like, how can you use it to actually make smart decisions about your own money, especially with everything being so complicated right now?
That's what we're going to try to figure out. There's no, magic formula or one answer that fits everybody. But there are some basic ideas and strategies that can help you navigate all of this.
Okay, cool. So where do we start?
Well, one thing that kept coming up in the stuff you sent was diversification. Seems like everybody's talking about it these days.
Diversification, yeah.
And for good reason. It's like the foundation of smart investing. Basically, it means not putting all your eggs in one basket. You spread your investments across different types of assets, stocks, bonds, real estate, commodities, and that helps lower your overall risk.
Oh, I see. So if one part of the market takes a hit, the other parts can kind of soften the blow.
Exactly. It's like having a safety net for your money. And even within each type of asset, you can diversify even more. For example, instead of only investing in U.S. stocks, you could add some international stocks to the mix.
That makes sense. So diversification is all about managing risk. But what about finding ways to actually grow your money in this environment? A lot of people are worried about inflation eating away at their savings.
That's a real concern, and it shows how important it is to have a plan that can beat inflation. That could mean investing in things that tend to do well when inflation is high, like commodities or real estate.
Speaking of real estate, one of the articles you sent mentioned that Zillow is expecting to actually make a profit this year for the first time in over a decade. That's got to be a big deal, right?
It is, and it shows how strong the rental market is right now. A lot of investors are interested in rentals, especially with mortgage rates going up and making it harder for people to buy homes.
Yeah, that makes sense. But real estate has its own risks too, doesn't it?
Of course.
Okay.
You have to think about location, managing the property, and how the whole housing market is doing. It's not just about buying something and hoping for the best.
Right. You got to do your homework. And then there's that whole world of alternative investments, which we talked about a bit earlier. Things like cryptocurrencies, private equity, hedge funds. People seem to be really interested in those lately.
Yeah, they are. And there are good reasons for that. These types of investments can potentially give you higher returns, but they're also riskier. and usually not as regulated or easy to sell as traditional investments.
So it's like exploring new territory, where you might find more treasure, but it's also more dangerous.
I like that analogy. These investments aren't for everyone, and you really need to understand what you're getting into. But for some people, they can be a valuable part of a diversified portfolio.
Okay, so we've got diversification, strategies for dealing with inflation, and alternative investments. What else should people keep in mind as they try to figure out this economic maze?
I'd say the most important thing, no matter what your investment strategy is to stay informed. Don't just get your financial news from headlines or social media.
So, like, do your own research, dig deeper, maybe even listen to podcasts like this one.
Exactly. Be curious, ask questions, and don't be afraid to question what everyone else is saying. Remember, nobody cares about your money as much as you do.
That's so true. You have to take charge of your own financial future. Don't just follow the crowd or let someone else make decisions for you.
Exactly. Learn as much as you can, make a plan, and stay involved with your finances.
So, as we wrap up this deep dive, I want to leave you with one last thought. We've talked about all these uncertainties, the market being all over the place, the AI revolution, all the policy changes, and the threat of inflation. So, what can you do right now to be prepared for whatever might happen and build a financial future that can weather any storm?
That's a really good question. And there isn't one right answer, but just taking the time to think about that question and to keep learning about these things, that's a huge step toward taking control of your financial well-being.
Remember, this deep dive is just the start of your journey to becoming more informed and empowered to make the best financial choices for yourself and the people you care about. Keep learning, keep asking questions, and keep digging deeper.
And until next time, stay curious, stay informed.